Okay.
Okay. You're recording?
I am recording. Yeah.
Okay, so let me go share here. What's up, Jaspreet and Anna? How are you guys?
Good,
I'm
good.
okay.
Yourself, guys.
Good. Yeah, sorry guys, I wasn't able to trade this morning because I had some personal stuff I had to take care of. But I will be available tomorrow, Anna and Jaspreet. If you guys would like to join me, we can always
For
make
sure.
that happen tomorrow. Okay?
Okay.
For sure. Thank you.
Roughly around the same time, guys. Roughly around the same time.
Okay.
Yes.
Thank you.
Okay. Yeah, welcome to today's class. I actually wanted to jump in and show you guys something that I noticed today and discuss an important concept in the markets that you and many others will encounter. Okay. And I want to show you guys a couple of charts. This one specifically is on Tesla. Now, the reason why I want to show you guys this chart is that if you guys have noticed in the news the last couple of days, Tesla stocks has been going bonkers, right? Like this is no longer a curve or trend line. This is just straight up, right? And usually when the trend line gets steeper and steeper in the market, it's typically a sign of a short squeeze in the markets, right? So what is a short squeeze? Are you guys familiar with this concept?
No.
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 No? Okay. So let me explain to you what a short squeeze is and how it affects the markets and how it impacts the market. So you guys can see here the price of Tesla is just going bonkers, right? Hopefully you guys are invested in Tesla. Are any of you guys Elon Musk fans?
No, I don't.
No? Anna's not an Elon Musk fan. Jaspreet, you?
No.
I am, but never invested.
But you never invested. Okay. Anyways, I want to use this stock as an example of a short squeeze in the market, right? So you guys understand that when trading in the market, in a real market, there are buyers, right? And they have to be connected with a seller in the market, correct? This is how a transaction takes place. If you want to buy something, you go through an exchange, and the exchange finds a seller to sell it to you, correct? Make sense?
Yes.
Right? Once that exchange has happened, a price is printed, right? Whatever price that you exchange at, a price is printed. Now, what happens here in this particular market when the market just explodes up like this is typically because you have a lot of people betting on the short side. So what basically happened is that Tesla became one of these stocks over the course of like 2016, 2017, 2018, even up to 2019 was an extremely unprofitable company from fundamental standpoints, right? So if you analyze this company based on all fundamental metrics, it should not be trading at $343 or whatever the price is right here. So I like that here. So whatever this price here, it should not be trading at this price here, right? And because of that, a lot of people in the markets believe that from a fundamental perspective, Tesla should not be this high. And so they took short positions. So you got a lot of people betting on the downside, hoping that the stock would drop. And again, their logic makes sense because Tesla is a company that over promises and under delivers. It has been their MO for like since their inception, right? They've constantly missed earnings expectations. They've constantly ran into troubles with production, and they ran into issues with making money. Now, because of that, a lot of companies in the market wanted to short sell it. So, as a short selling position, all they basically did was they borrowed a stock, companies, hedge funds, individual traders. These people just essentially borrowed a stock that they did not own and they shorted the stock, hoping that as a price goes down lower and lower and lower, they could buy it back. So the idea of a short sell is essentially this. Okay, you sell short roughly at this price right here. This is $320. You don't own the stock. You sell short, so your broker owns that stock. Your broker is lending you the stock. So you short sell a product that you don't own. And when the price goes down, you essentially cover your position by buying it at $160, right? And then you make the difference. So essentially you shorted at 320 and then you got out at 160, right? You bought the stock from your broker at 320, right? The price went down, you bought it at 160, and you essentially give your broker the difference. And you make the difference, right? In that particular situation. So your difference here would be about $160, right? So you would net on the short sell position if you were right. Uh-huh. If. Big if. Okay? Now imagine all those short guys right here that got in at this price. Imagine all the short guys that got in roughly around here. Sorry, back to the initial price. That got in like here and here. All the guys who are betting short here, okay? What happens? They think that the market is going to go down lower, so they hold on to their short. And so when the price rebounds, guys, when the price rebounds and goes above their entry price, these short positions are offside. It's the same thing as buying a stock at $10 and the stock is now trading at $8. It's trading at $7. It's trading at $5. You're losing money as the stock goes lower and lower and lower, right? In a short position, it's the opposite. As the price goes up higher and higher and higher, you're losing money. You're in a short position. You're losing money, okay? Now, this is where the mother of all short squeezes happens, is that you have typically a very strong support or technical level, which we see here, right? And as the price is being driven up against the shorts, what do the shorts do in order to get out of their position? If I am shorting, if I am selling to get into short position and I am offside and I have to take a loss, how do I get out of my position? Anybody?
Buy it, I guess.
Correct, right? So Jaspreet, if the price is here, you're buying it at a loss.
Mhm.
If the price is here, you're buying it at a loss. If the price is here, you're buying at a loss. If the price is here, you're buying at a loss. Now, what happens to the price when a lot of people are buying?
What?
It goes up, correct. So in this particular case, we refer to this situation as a short squeeze, okay? And in a short squeeze, the price is not going up because of fundamentals in the markets. The price is not going up because you're seeing the company perform extraordinarily well. Although I have to say that Tesla is turning around, is not performing extraordinarily well, right? But the cue here, or the biggest takeaway here in this, and why you understand it's a short squeeze, is that short sellers are covering out of their positions at a loss. They're essentially losing money. And so they have to buy their position back at a higher price. And that act of buying helps to flood the price even higher and higher and higher. That is the concept of a short squeeze in the market. And it tends to happen around some key technical levels, okay? Now, I point to this out as a very good example because I was on Jalopnik earlier. You know, I like to look at cars and read articles and things like that. And I saw this article here. Where is it? About Tesla. If I can find it. It may have been another website. Hold on. Could have been Zero Hedge. But anyways, the point here with the article is that it is basically saying Tesla's valuation, the market capital of Tesla's valuation is now worth more than Volkswagen. It's worth more than BMW. It's worth more than Mercedes. It's worth more than every single car maker in the world, right? On an individual basis. If you compare Tesla to Mercedes, Tesla is now worth more than Mercedes by market capitalization, right? How crazy is that for an electric car company that has just came out several years ago, maybe like less than, or just over 10 years, and is now dominating the industry so much that it is a larger company by market capitalization than a company like Ford that has been around for almost 100 years, right? That's the crazy thing about markets, is that markets a lot of times is more driven by psychology and human behaviors and less so by fundamentals. So I really wanted to point that out to you guys and show you guys this because it is an extremely good example of how Tesla has bottomed out at $150 and it's ballooned to almost $800 in a matter of like 5 months, 6 months, right? So it's a crazy, crazy, crazy explosion. And there's a couple takeaways from this, okay? Number one, if you look at a stock that travels like this, it's a very good indication of a squeeze in the market, right? It's just like when you look at Bitcoin. Bitcoin. All right, so sorry, BTC, USD. So I can show you guys. It's like Bitcoin back during these days. Back during these days, right? Like the rise of Bitcoin from like 3,000 to like 20,000. It's very similar. Very, very similar behaviors is taking place. And I want to show you guys this because it happens when you trade stocks. It happens when you trade cryptocurrencies. It happens in the Forex market. Take a look at this. This is the Australian dollar, right? Take a look at the Australian dollar here at this crazy technical level, all right? So you're seeing here a crazy, crazy technical level here, okay? Now, this is the lowest price traded going back to as 2019, okay? Now, again, the concept of short squeezes or squeezes in the markets can be applied to the buy side or the sell side. In this case, the same situation applies. If you're a buyer here and you believe that buying here is a good opportunity because you see this crazy level here and you think the market's going to go up, you'd likely buy here and you'd probably have your stop loss right below this point, this level right here. Well, guess what happens if the market price continues to trade lower and lower and lower, right? All the guys who buy here believing that the price is going to go up are going to have to buy at a loss if the price goes down. So they end up buying at a loss down here. Or sorry, selling at a loss. If they're buying, they pushing the price up in the hopes that the price will go up. But if the price is selling against their buying position, then they would have to sell at a loss, right? So they would sell at a lower price, and that's essentially what causes the floodgates to open up. So you'll see, very typical to see the price of something like this when it breaks through a key technical level, just go plop, all the way down like that. It's just like on Tesla, when Tesla broke out of this range right here. You see this range right here? This was the range that it was trading in since almost 2017. Once it broke that range, it just went plop, skyrocketed, right? That's the concept of a short squeeze in the market. I really want you guys to understand this because it applies in every market that we trade, whether it be gold, whether it be Forex, whether it be stocks, cryptocurrencies, it happens in every single market. So I just wanted to give you guys a little quick synopsis on this because it is something that I found quite fascinating. Unfortunately, I didn't get in on this stock, but you know, our technician here, Daniel Kovac, was able to catch a piece of this, and you know, he's pretty happy about it. You know, and it also shows a very good example of the case of a short squeeze in the market. Okay. Do you guys have any questions for me about short squeezes or this concept in the market at all?
Yes, I do.
Tyler, please.
How can you see how many shares they short in the market?
Short squeezes in the market?
I mean, at the time they, for example, today you want to see how many shares they still short.
Oh, how many shares in the market? Well, here's the thing with short selling, right? Short selling requires that you have a leverage trading account, right? And according to leverage trading rules, you're required to disclose that information, which is how the market knew that Tesla was one of the most shorted shares in the market, right? Right. So there are informations and ways to find out, like you see here. Like one of the largest shorted stocks in the market is Tesla, right? So there are ways of finding this. You just probably have to do a lot of digging in the markets to find information related to short selling, specifically short selling on this particular stock. In the futures market, it's much easier to see that information because we trade through the Chicago Mercantile Exchange, and you get information on a weekly basis as to positionings in the futures market. So you can see buying and selling positionings in like CAD futures or S&P 500 futures, right? Similar to shorting on stocks, the only difference is because short selling stocks do not go through the Chicago Mercantile Exchange, you just can't find that information on that particular exchange. So if you do some research in the markets, you should be able to find that information. Unfortunately, I don't have the direct answer to your question there. Okay.
So we can not see the deep of the markets and then find out how many share they short.
Yeah, so again, finding the exact amount, I'm not quite sure where you find that information, but you can find like regular information related to Tesla, like, you know, how much volume is traded per day, you know, buying and sell, for example, things like that. Like, for example, you see here, 47 million volume was traded, right? And it usually averages 7 million in a day, right? So that right there is big red flag that something extremely abnormal is happening today. Just based on the amount of volume compared to average volume, right? The second thing to note in terms of pricing is that usually when you get large candles that just goes rocket up like that, that's a red flag. When the market trends up, it usually trends up like this, not like this, not like this, right? So that's usually a red flag of a short squeeze in the market.
Okay.
Okay.
Yeah.
Any other questions, Tyler?
No.
No. Jaspreet, Anna, do you guys have any questions for me?
No.
No.
No? Okay, so I hope you guys learned something from this little short bit on the concept of short squeezes in the markets. Again, you know, I'll pass the class over to Danny so that he can explain more and take you guys on to today's modules and whatnot. But again, I will jump in back and forth every now and then to give you guys more information about little key things and that you will pick up from trading the markets. Okay?
Okay.
All right, so I'm gonna stop this and pass it on over to Danny, and I'll let you guys get moving with your class.
Sounds good, man. Thanks for that, Chen. That was a really good expose on short selling. Yeah, just you know, because Chen mentioned it. You know, I do follow stocks, and I have a portfolio that I manage, and I recently took profits, as in like a couple days ago, on Tesla. I see now it's in the 700s. I took profit at what was it, 500 and something, and I bought at around 240.
Question for you.
Yeah.
Do you feel like a boss or an idiot?
No. I feel like a boss because I feel like a boss because, you know, we'll you know, be touching on this you know, as we progress through the course. Okay, how do I start now?
Just share your screen.
Here we are.
Okay.
Okay, so you know, I touched on this. We've touched on this a little bit, but you know, part of trading or investing is understanding when to take profits. And you know, I've when I was trading with many people, really, you know, we'd exit say 13 ticks on side or something like that, make a good profit, and then you see the thing skyrocket off to wherever it goes. And of course, they're like, oh man, you know, why didn't we hold or whatever? It's like, that's the wrong way to think of it, right? The right way to think of it is how much profit did you make? Were you green that day? And if you were within your risk management, right? If you were within your risk management parameters, then you did well, right? And my risk management parameters was I was only going to sell at like 360 or something like that, but I just kind of kept following with the stops and all that. And, you know, as I'll show you guys how to do. And everything was within my parameters. So I was just like, you know what, let's take profits now. Do I think that Tesla will probably go, you know, the way of Amazon? Yeah, I mean, it has a good chance to. You know, there's a lot of reasons why I think that. You know, we can maybe have another impromptu course on, you know, evaluating companies and what makes one company a good buy over another. But, you know, suffice it to say that there's a lot of factors that are in its favor. But part of being an investor is understanding when to take your profits. Okay. And that's what I felt was due for this stock. And I'm really not, I have no regrets on that.